Hello guys, and welcome to Mali Traders. Today we'll be doing a little bit of market analysis, not necessarily mentorship or tutorial stuff. If we start with ES here, clearly we've been in this uptrend for a while now. This is, I think, since March, going from this swing low, right? So this has been clearly going up, and I think we are definitely, I think we're coming up here, okay? So, and then potentially here. But for that to happen, the Dixie have to sort of be stagnated or be trading lower due to the risk of flight to quality sort of thing. So right now though, on this weekly, the next area of liquidity obviously is up here on the weekly time frame. We just rejected from this other block and we are trading inside currently, okay, just below it. So I think it's going to consolidate a little bit, or rather when we open tomorrow evening, and then by Monday we're going to see gravitation towards this buy side on the weekly time frame, and then potentially tap into the fair value gap. IVG, the imbalance of this week right here, this weekly candle. Okay. If you are a member of my Discord, or if you know how we trade, we usually take levels between Friday to Saturday, Sunday over the weekend, and then we trade the levels on the week during the week. So I've just taken, it is a lot of lines. You don't have to have all of them on. It's just to keep an eye on where your liquidities are. Okay, so this is what it looks like on the weekly level, and then time frame, and then so this is just basic levels taken. We know where our daily lows are, and then our daily levels, just so when you go on a lower time frame, you're going to look for entry. You're waiting for these levels to be pushed. Basically, that is what we do in short, if you just have to keep it simple. So I'm going to show a little bit of example of how some of our members traded this last week, and this is without even I can just show you here, for example, clear example, right? Using this daily level. So basically what you would do in this situation, we will normally mark daily like this, right? So now this is where the knowledge comes into play. If you see a situation whereby the market is consolidating like 1, 2, 3, 4, 5, 6, 7 over a week, 5 days, 6 days of consolidation like this, it's just doing this, and then take note of those lows because they've not been pushed. So this was a clear daily low, and this was a clear daily low, right? But this is lower, so this is a swing daily low, just like this is a swing daily low. So you have two swing lows. Let me zoom up so you can see. So you have this low, and then you have this low. By the way, this should be on the daily, right? So you know it's D, okay? So we're going to, what you will be doing is you will put an alert just like this. Alert. What are you waiting for? You're waiting for this level to be pushed, okay? So right now, you can just remove that. You're waiting for this level to be pushed. So let's see what we can find here. Oh, by the way, just so you know, if you're using implied fair value gap like we do, we use it a lot. This level is also an IVG. So clearly you take from here half of this week and half of that week. That is what the level you want to measure, like that. Okay, that is your IVG. Basically, it comes. That's what it boils down to. How do you measure that? You take this here, like that. I'm becoming really good at this, that I don't need to use this. Okay, so and then you do the same on this, like that. Okay, look at that, almost got it right. So these two things is what you do with all the pairs that you trade in over the weekend. All right, so we have a template for it's called implied fair value gap. We only use it on the daily, or that is the ones we take anyway. So this is what it would be. This would be on your higher time frame file, which is this. Then this one, IVG, will be on your Mali levels. That is why you have something like that. So you can see I have the older ones there. You know, the reason I kept this, I haven't taken it out today because I'm still waiting, or rather I'm still expecting the price to tap down in here for some reasons. I don't know, don't ask. So now when price taps into, take out your, so you have two PDAs. This is two heavily weighted PDAs. Your implied fair value gap, which is this, because it is a gap, it needs to be filled, it needs to be violated. And then you have your swing low, your daily swing low, right? Because this is set side, you're wanting this set side to be pushed. Everything here is liquidity, okay? Everything in this zone, this entire zone is liquidity. So you're just waiting for it to be pushed. Let me move the magnets for ease of so just waiting for that to be pushed. What is it? Okay, so now let's examine what happened here and how it happened. Okay, so if you go to 4 hour, what's better now? Try speaking a bit further from the mic. Okay, sorry. All right, I guess it's better now, like you said. So we use the 4 hour a lot also. So when you go to the 4 hour time frame, you can see you have a fair value gap here, right? You have this BC, buy side imbalance, sell side inefficiency. Okay, so at the same time, just take note of it. We don't take levels on the 4 minute, on the 4 hour time frame. Again, our time frames are weekly, daily, 4 hour, 1 hour, 15 minutes, 5 minutes. Okay, I use the 1 minute too, but if you are not good enough, don't go below the 1 minute, don't even go below the 5 minutes. Stick to the 5 minutes and above for your entry time frames. All right, but these days I go below 1 minute. I even go to the 30 seconds chart, not to look for entry, but just to see what those algorithms are doing. Okay, so you have a fair value gap here for hours, so you can as well just take that. So now you have three things. Okay, fair value gap 4 hour. So now you have three things there. You have your implied fair value gap, and by the way, on the daily time frame, if you notice, you don't have a fair value gap, but you have implied, right? So this is an implied fair value gap. They are different things, but you can treat them the same way because it is a gap that needs to be tapped into and that needs to be violated. It's as simple as that. It is a gap, that is all that matters. All right. Okay. So now you have your daily low, and then you have your IVG, and then you have your 4 hour fair value gap. This is what you want. By the way, this hasn't happened yet. All this has been happening. You're just waiting patiently. All right. Especially when you see that this buy side, you see, if you look up here, now let me go to the daily and then I can show you. Okay, this was the last high though on that day. Okay, but if you go to the, I don't use the 8 hour so much. If you go to the 4 hour, if you see the 4 hour like this, before this happened, you take these, go to the magnet again, tap it up there. So you have equal high liquidity, all right, or equal high liquidity or buy side liquidity. You can as well choose anyone. We have it's basically the same thing. Okay, so but because these two are relative equals, so I'll put it on EQH. All right, okay, equal high liquidity up there. Now this kind of purged it. Once this kind of purged this, technically that is a market structure shift. But if you look closely on this day, let me just put this so we can remember. We have to always be aware of what we are doing, the market environment, and so we can know how to navigate it. So you know that ES has been consolidating for a couple of days now, and then on this day waiting to see either we break it with the displacement or we come back into the range. That is what you're looking for. And what have I if you've been following my channel, or if you've been following up my mentorship, you will know that when we have this is a sideways, this is a crab market, right? And what do you do in the crab market? You ping pong it, all right? You just support resistance, you trade it, you buy low, you say high. Basically, that is what you're doing. Simple as that. Don't overcomplicate it. So this is what you'll be looking at, right? So let me move this. Oh, by the way, this hasn't happened yet, okay? This hasn't happened. So we were there. That is what we're looking at. So if we put it on 8 hour, you can see it clearly, right? So all this hasn't happened. Okay, maybe this happened. You know we're in a consolidation. To break out of this, you need displacement. You want to see displacement, and then to see, okay, the price want to continue going up. However, this CSR liquidity is just staring at you. You know that, okay, potentially any break above here is a false break. This liquidity has to be taken out. Why? Before any significant move up, continuation, the opposing liquidity has to be pushed. Let me break that down again to you. If price is going up, obviously now we're in an uptrend, right? We're in a clear uptrend. Okay, then we consolidate, and then the consolidation here is building liquidity, CSR liquidity, meaning that there are a lot of sell stop here. There's a lot of money here that needs to be taken. So for this market to continue going up, is going to want to take out these sell stops. Okay, why is that? Because a lot of retail, a lot of traders, they will put it here that, okay, if price, what is sell stop? Let me explain what sell stop is. If price is trading around here like this, and then there's this liquidity here, there are a lot of people who would put what's it called, like a limit sell sort of thing, that once price break this level, okay, I hate this thing sometimes, jeez, I'm just gonna put it over here. Okay, there will be, once price is trading here, they will say, okay, once price break this, they want to short, so they will do something like this, whereby no, that should be which this is for shorting, right? I never use this tool. This is for shorting. Okay, yeah, this is for shorting, and the other one is for longer. All right, anyway, point is that was kind of stupid, brain freeze. Point is, they will want to short from this point. They will put a limit short from this point, okay? And the market knows this. I don't know why people do it. It's kind of stupid, but it is what it is. So this market will come here, take out these people's, it will stop them out. Instead of going further down, which is what a lot of this type of traders anticipated, the market will just take out the stop and continue up. Okay? Or if you were long, you put your stop loss really close, or however that is. Please don't ask me how these people does it or why they do it. This says stop, buy, stop sort of thing. I don't trade that way, and this long short tools, I don't use it so much, so excuse me on that if I said or made a mistake there. Point is that, like I said, before any continuation, significant continuation, potentially the opposing liquidity in this case, which is the CSR liquidity, will be taken out. So the same, if price is to go down, the opposing liquidity will be pushed. In this case, it will be the buy side liquidity. Okay, so remember this is the range. This purple thing, this is the range that we were in. Okay, so here, this is where the range started. We just be ping ponging, came here, consolidated a couple of days here, 2 or 3 days, and then we start going up, and then we'll be just been inside this range. So now that you know that, what you're going to be doing is waiting for a proper breakout, if you want to call it that. Now let me go back to what I was saying before. This took out the buy side here. It took out the buy side. However, this sell side was still left intact. It was still left intact. And you have to be patient, wait to see that this sell side is purged, because you have three things, again, like I said before, three PDAs. PDAs are premium discount arrays. Okay, that is what PDA means. You have your IVG, you have your 4-hour fair value gap, and then you have your daily levels. Okay, now we are on the 4-hour. This consolidation becomes clearer. All right, so but then we came in here and then went up. Now how would you have not to trade this? Hold on, let me see. Okay, this, let me use the manual. This is just my algo that plots the OT and all those other levels automatically for you. You would take this and then you put it up here. Excuse me, I have to take out this magnet again, like that. Then you got your OT. So you take this, this is what you do. This is what you spend your time doing when the market is slow or when you're waiting for things to happen. Don't just sit and be idle, right? Otherwise this thing is going to happen and you're just going to miss you. You're going to miss it rather. So you're waiting for this to be taken, but market might not give you that right away. It's not just going to come, take this side out and hand you, okay, now you can long me. No, market will probably come halfway, go up, take out buy side. Remember, there is still a lot of, there's still buy side here. Probably there is other levels. If you go back, I don't know. But right now we are analyzing this price action right here. Okay, so market tap into your OT. So this is where you can look for potential long. Why? Assuming the price market doesn't come here, assuming it didn't give you this. So within the 4-hour time frame, you already know that, okay, this is here. Price is going up. You're just waiting for this to happen. Okay, you could have shorted here. There are people who put a limit order here to short, but we don't trade like that. All right, so why this is happening, you take from here to here. So anything under here, this is your discount area. This is where you want to buy. All right, this is where you want to buy. So this is cheap for you. Anything from here to here, this is your premium zone. This is where you want to be shorting from. Okay, so now that's it. I know this is might be obvious to a lot of people, and even if you're used to ICT, discount array and all those sort of stuff, but trust me, when it comes to execution, most times you're going to freeze. How do I know this? Because it happened to me, and sometimes I still freeze a little bit, like, okay, am I doing the right thing? It is going to happen. Your heart is going to raise a little bit, and then, but okay, listen. So now you long it here, wait, and then you can short it from here. If there is a level here, I don't know, I didn't trade this. I'm showing you now basically what my crew member traded, because we have a chat where we discuss all these things. Okay, I didn't participate this last week because it was all crooked up with ECE, economic calendar event. Now the point is, let's go to the lower time frame, our entry time frames, to see. So we're going to analyze this and we're going to analyze this. Okay, that is what we're going to do. All right, we'll go first. Let's see how 1 hour treated us. Yeah, this is just I think this was a news thingy. I'm not entirely sure. I'm working on another indicator that that works with just high impact news, so I can always see what happened historically. Okay, so this is just like a whipsaw event. Let me see, what time of the day was it? New York time. Yeah, perfect. And it was, yeah, it was after lunch. So I guess it was I don't know, maybe not. Okay, so now we go to the 15 minutes time frame. So we want to see how you enter Remember, no liquidity grab for us means, yeah, well, no trade. I don't have that. I don't really have that street rule though. But I just like liquidity to be tapped, or rather to be taken. So if you come to the 15 minutes time frame, remember guys, I said we use the weekly, the daily, 4 hour, 1 hour, and 15 minutes. So you can see how I've been coming all the way from these time frames. Starting from the weekly and then the daily, remember that. And then 4 hour. And now I was just in the 1 hour to see what was happening. Okay, let me go back to the 1 hour. So coming back here, in this 1 hour, you can clearly see, okay, I have my OT here. And then what do you have on the 1 hour time frame? You have, let me put the magnet up again. You can see you're expecting price to come here or come here. So what you want to be doing, forget what is happening up there. The trend is strong anyway, we're going to go up there, but before we go up there, we are definitely coming lower, or definitely or not definitely, whatever. Point is, potentially, all right, you're anticipating, okay? Remember, if you don't do this properly, you're going to lose money. The first rule of speculation is capital preservation, okay? So we are speculating here. For you to be a good trader, you have to be able to make a proper analysis and proper assessment, otherwise your cash is gone. So again, in the 1 hour time frame, what is this? SS. Okay, so you have a SSR liquidity right there, waiting for it to be pushed. This is your SSR liquidity force, and if you take it between this and this, you can also say, okay, we have Rex. All right, you can call this whatever is relative equal lows. Okay, you can put it like this. If you're in my Discord, you know we use these things a lot. This is how we take our levels. So this is called Rex. We have a relative equals. Relative equals. So because it's the sell side, you know it's the lows that we are measuring. Okay, and if you take it here, you can see even this one, this candle, this 1 hour candle, 2 p.m. It tapped into your OT zone, but it only took out this low. It didn't take out this low, so there is still liquidity here. So by now, you could decide to leave your Rex in place and your SSR liquidity. So you don't have to use the Rex, but I'm just showing you the option. You can use Rex if you want, right? Or you can just use SSR liquidity. Simple, it's clean. Just keep it there. You're waiting for this to be pushed. Right, so that is how you analyze on your 1 hour time frame. You know what is going on. You see that it consolidated here a lot, and then this went up, close up there, dropped down weak. So this is a whipsaw event. It just like went up fast. Now when you see this happening, there was a quick buy here. It just went up again, and then the price just started going up. You might think that, okay, price is never coming back here to take this higher, what I would rather call like higher time frame liquidity. What I mean higher time frame is because in relative to your 1 hour time frame, these time frames are higher. All right, this is from wasn't it from a weekly? What was it from? Yeah, was it? No, it was a sorry, yeah, a daily. Okay, back to the 1 hour. So this is a higher time frame liquidity. This, comparing both of them, this will be internal liquidity and this will be external liquidity. I repeat, internal liquidity. Normally when you're trading, you take profits on internal liquidity and you close your position in external liquidity. So there are two different types of liquidity. All right, you are going to be trading this by initially examining how this internal liquidity is working. Okay, so here within the 1 hour time frame, you see consolidation. Market is slowly dumping. Don't FOMO in. Be patient. Don't FOMO in. I'm speaking to myself basically here. Don't FOMO. Be patient. All right. And then price did this and started going up. Okay. Yeah. Well, if you just go up, well, you miss it. You miss it. It's just like a boss. If you miss it, you go to another. You wait. Another one is coming. Besides, you have, like I said, if you're trading with us, we trade a lot of pairs. Okay. You have a lot of other things that you'll be looking at. Now it went up and then it came down again. So what about here though? Let's see in the 15 minutes time frame what happened. Whipped into it. Okay, we go to the 5 minutes time frame. You might not gain an entry, you might not get an entry. If you look on the 5 minutes, again, liquidity was the same, liquidity is still there. All right, looking here, for example, you can see, okay, and then this, it just whipped, kind of chop around a little bit, like 20 minutes, half an hour, then it went up. Okay, now this is where you might be thinking, okay, shall I FOMO in and just like, okay, price is just leaving me and stuff like that? Yeah, well, if you FOMOed in, yeah, you would have made money, but it would have been a bad practice. Okay, and then you do it multiple times, you become used to it, and then it's just like gambling, it's just a FOMO trader. All right, so here, even if you go to the 1 minute time frame, I think this was just a whip, and let's see though, you might not gain, you might not have a good yeah, like I said, it's just weeks, and I do not like to go below the 1 minute time frame. Although now when this tap into here, all right, it did this, consolidated, took out this sell side, went up, market structure shift. Technically you could enter here. Why here though? Why just here? Again, the same principle applies. You can take this and let's see, let me see if I captured it. No, it doesn't come on the window here. By the way, let's see if we have a gap here. Okay, it makes sense that a lot of this is attracting price, or price is drawn to it. Okay, point is, measure from here. Okay, did they come into your OT zone? All right, so you take, you want to look for discounted price. Now this is if you want to catch this from your OT here. All right, this is just before the higher time frame liquidity. Now we are trading the internal liquidity. Okay, so this is internal liquidity versus external liquidity. All right, we want to trade the external liquidity, but we're taking the opportunity, catching early moves inside liquidity. All right, so you measure this and this. Now the sell side has to be taken out, right, and then price moves up. What do you have here? Look closely. Now we're on the 1 minute time frame. This hasn't happened, remember. Okay, this hasn't happened. Price has just done this. This hasn't happened, you don't know. Now in hindsight you can see, oh yeah, it would have been a good trade. Yeah, it would have been a good trade, but the question is, did you see it and did you trade it? I'm talking about execution here. So leave your pride at the doorstep when you come in here to talk about, oh yeah, you know, we don't do hindsight here. Okay, so when you see this, initially you have a balance, a BPR here. Okay, gosh, I have a headache now. Why is it a balanced price range? BPR remains balanced price range. Why is it like that? You have a CB here, sell side imbalance, buy side inefficiency. So this needs to be balanced out. And then price came down here, leaving this fair value gap. This is a liquidity. This is a gap. And then price went up fast. And then there was no proper trading through, you know. So it just went up fast. So it's also the same, but on the opposite side. So this is a buy side imbalance, sell side inefficiency, meaning that price needs to be sold into this level. All right, so sell side was inefficiently delivered, meaning there was no proper selling into this zone where it was going up, so it was only buy. Right, so this is like some kind of a Jesus candle here, and then price came in here, tap into it. So like I said, this hasn't happened. You want to trade this, you're looking for a long entry. Okay, so this is what to do. You draw out your balance, your to see if price is going to come in. So textbook entry model, I think this is 2022 model for ICT, is that you wait for market structure shift and then you enter in the fair value gap. All right, so what have I said before? From here to here, this swing high, rather these are swing levels here. So you're just waiting for market structure shift. So this is your MSS. You have one there, and you have another one up here. Okay, so these are your MSS. The same thing here. These are your MSS, however you want to call it. Market structure shift. Some people will say chalk cock. I don't know what to call it. Sorry, not cock. Church. I don't know. I know how to pronounce it. CHOCH, something like that. So this is what you want to see. Market structure shift to the upside. Fair value gap created. Market is in a discount premium. If you look closely though, it's a little bit weird because this price didn't actually come in here. It would have made more sense if it came down here and then tap into it. Okay, but this is an order block here, so technically you are also trading from the order block. So this would be a good entry. It's not all the time that you get price coming into here. And if you zoom in closely, if you zoom in, bro, we got in there. So yes, criteria is met. Discount, entry, right there. That is some Axel Frog stuff. Okay, don't ask me what Axel Frog is. It's an eternal joke between me and my wife. So there you go. This is how you enter, right there, on this one. Okay, you're welcome. So now let's go back to the main one. So if you had taken this trade, so let me put it on 15 minutes. If you have taken that trade, it would have taken you up here. By the way, when you take a trade like this, you're looking for the next swing high, okay, to take out to close your profit, to take profit out. So on your way, you will just be taking out profits, you know. But because you are expecting this, you have to be very careful. You have to be wary, you know. So if you had closed your profit, if you had closed your trade here and then you went up there, hey, you haven't done anything wrong. So assuming this was a higher time frame area though, let's say this was a higher time frame liquidity zone and price came, the same principle applies. Okay, so you take this from here, let me close this again, from here to here, this discount premium. Now you want to sell, you're just waiting for price to tap down into this place. There's a lot of things going on here. We have order block and all that stuff. Okay, you want price, you're looking for a sell, so you just wanted to see price is coming back up again. The only thing you should be focusing on, is the PDAs above this level, which is the arrays above the arrays in the premium zone. Remember, this is a premium and this is a discount. You always sell it from the premium and then you buy from the discount. So now that we're looking for a sell, this is it. This will be your entry right there. This right there. Okay, this is your 15 minutes fair value gap. 15 minutes right there. So as this is happening in the market, your job is to do these things. Okay, price is coming here. Okay, price is here right now. Assuming price, as this is happening, price is here. Okay, you thinking to yourself, okay, then this is some kind of sharp color. Gosh, what's wrong with that? Okay, so assuming price is here, you're thinking, okay, price is here. All right, let me see what's gonna do. Okay, it stays here. It's like sort of consolidating within this 15 minutes time frame. By the way, you already draw out this. As price is coming, you drawing it out, just pull it all the way, and then you measure. You already measure. Take this Gann box thing, this Gann box. Okay, how do you do that? You right click. I'm not supposed. This is not what this is all about, though. But you just, these are the points you need: 0.5, 0, and 1. Okay, and then you just do that. So that is how you get that. That's how you use this to measure your premium to discount. Okay, so you have this drawn out, and then once price is coming here, boom. That's how you take it all the way down. Now, price came into your level, remember this is the level you'll be waiting for. This is your external liquidity, higher time frame area, higher time frame zone, higher time frame liquidity. All right, so now price is here. Remember what I said, that you take profit internal liquidity and then you close trades in external liquidity. All right, so here if you were shorting from here, this would be your TP zone. You shorted from here, you will take first profit on this zone. Okay, this zone will be your TP, this zone will be another one, this zone will be another one. It doesn't matter, it could be 10%, 15%, just be taking it. All right, do as you like, as you wish. And then definitely this zone, and when price comes here, you should close your trade. Okay, so now if you look, so far we have taken trade from here, we rode it up. We didn't catch this one because except if you put a limit trade, a limit sell, it would have been difficult. This is not my type of trading. This is my type of entry. This is my type of entry. Oh, by the way, what do you think we'll find here? That is your OT. Yep, you got your OT right there. Okay, but don't rely on my indie, that is not for you, so you're gonna have to do it yourself. Put this again right there. Okay, the same principle applies. When this is happening, you take this, go. You should have all this customized. Please, if you're watching this video and you're new, or if you're not new, go watch all my videos taking levels and then join the Discord, and then you will see exactly, this is exactly what I teach my students. This is how we trade, me and my crew, everybody that trades with me. All right, so you will enter on this OT, and again you have your fair value gap. And with the narrative, now we're talking about narrative. The bias is that the bias is bullish. Okay, the higher time frame bias is bullish. The narrative, however, though, is that price is going to come and attack opposing liquidity before going up. At this particular time, this was a power hour trade. All right, what I mean by that is it is the market on close. This will be a market on close liquidity right here. So if I take this, okay, this will be a market on close macro right here. Okay, the last hour attack that liquidity right there. So this is how you traded this, up, down, and then up again. Now let's examine this point, how to enter. If you look closely, I repeat to myself, if you look, the same principle that we use here is the same principle we're applying here. Don't overcomplicate it. Trading shouldn't be that complicated. Now, because this is the initial point, point of entry, initial trade you wanted to take initially, because you were waiting for all those liquidity to be taken. All right, higher time frame liquidity. So now that is here, let's try to analyze this zone. Okay, and then we have this little one here, but that is just, oh, it's like a small planet and a big planet. Ah, interesting. It's like a sun, actually. Cool. All right, guys. So let's dive into this. It's getting too big. Jeez, why did I even choose this? Okay. Now with 5 minutes, we can see what is happening. This was happening. You're waiting for this, for price to tap into here. If you look closely, guys, price tap into the 3 PDAs that you'll be waiting for: your IVG, your 4-hour fair value gap, and your daily level. You can't get it. This is like the sweetest trade. This is the sweetest thing you will ever find. Once this happens, and your bias, you're trading your bias, which is your higher time frame uptrend. Okay, the trend is going up. It's crazy. It's crazily high. I mean, bullish. We said it before. We started that, okay, we're bullish. Like I said, we started from the weekly. All right, that is the bias. Okay, and now the narrative is, where is price going to go, and why should it go there at that particular time? At what time, and what should it do there? Okay. put this though? There was no, because it's late, and so there was no key zone or any of that. So here, now price came here. So let's go to 3 minutes. Now 3 minutes. This is a small one. Okay. Now, then you have when you see this, this is what's going to happen. When this happens, price has tapped into this. Now the 3 minutes time frame, because you have to go look for something to, you're looking for entry basically. So what you do basically is that you take this, you draw it out. This is your order block. There's your 3 minutes order block though. Where is it? OB right there. Okay. Now price tap into your OB. You have to understand that the wicks does the damage, and the body, quoting ICT here, the body tells the story, or the wick does the damage. And remember this, anytime you see an order block, you see a candle like this, the wicks are the most sensitive part. That is why IFVG is measured from the wick. They are the most sensitive part of an order block. Keep that in your mind. So when this candle tapped into it, it covers that upper part, that wick. So when you are analyzing an order block, it's 3 things you have to keep in mind. The wicks. Oh, by the way, the wick has a lot of components to it. That is, we have the quadrant and all that stuff. But besides the wick, and then the next level will be the 50% level, which will be the threshold. Okay. The mean threshold is called mean threshold. The 50% of another block is called a mean threshold, MT, and the 50% of a wick like this is called consequent encroachment, CE. All right. So now, as this is happening, this has tapped. This hasn't happened, guys. Remember, this hasn't happened. We're on the 3 minutes time frame. We're analyzing how we're looking for entry from here because price has tapped into our higher time frame level. All right. 3 PDAs has been violated. Okay, not time for action. Now, this order block, you wouldn't know technically if this is going to be an order block or not until this candle forms, and then price trades above it. Price is going, and this is an up close candle, so this becomes an order block. All right. And depending on what was here behind, I cannot go back now. This might as well be a proportion block, but we're not gonna. If it's too far, I don't see it as a proportion block. By the way, I just see it as an order block. It is when it is closed like this. This will be a proportion block. If it has traded into this, did they do that? I don't know. Let me see. Nah, not really. Okay, so point is, this is an order block. It's been confirmed by these two up close candle. Although this is down close, but by this movement up. Okay. And let's go to the 2 minutes time frame. Let's see if it is more pronounced. Okay. This was your order block. Here. This is your fair value gap. This was your entry. End of story. So this is your fair value gap. This is where you'll be entering from. So if you measure from here to here, it might not be. Let me see if it's the discount from there. Remember, I said it before that sometimes the market will not give it to you. Let's zoom in a little bit. Okay, yeah, it is. Again, Axel Frog sample pen, right? It dipped in slightly. So, there you go. That is how you trade it. All right? And then you did this, and market was just consolidating here, and probably you'll be tired, and it just did this for, I don't know for how long, and then did this. Remember, I told you have to take profit. Here is where you should be taking your first profit, or maybe here even, if you like, take a little bit of profit here. You don't have to jam your stop loss too close though, because if you have moved your stop loss, what is it called? Stop loss too close, I just see the chat now. Yeah, that is Accept Frog. Okay, okay. All right, I'm not gonna say this because this is going to YouTube. Well, now the Discord members, yeah, you still won't get it. You still won't get it. You still won't get it. All right. Point is, if you have moved your stop loss, if you enter here, by the way, your stop loss should be below this, or at least on this swing low. Now, when you take your first profit here, or here, or even here, and you move your stop loss, I can't talk today. You move your stop loss too close, this would have wicked you out. But if you're already taking profit, hey, then it's fine, right? So you took a trade here, good trade, and then came up here. How many pips is that, or how many? What's it called? From this was your entry. That was about 90 pips, and it just went up. And you can measure it yourself, so you can go back and back this. Now, if you got taken out here because you move your stop loss. I'm sorry, guys. I'll be taking levels all day. If this wicked you out, by the way, just want to try something. Still didn't give it. If this wicked you out, you can re-enter using the same principle. I don't have to go back in there and do it. Okay. For example, here will be an entry, market social shift, price tap into this, and then gone. Now, when this is happening, you don't have to be afraid that it's going to come back and take this, because it's already done the damage here. So this is just clearing liquidity. This is just came back here to clear all this liquidity. You see, all this and this. All right. So there is liquidity all the way here. I'm just gonna. There is liquidity all the way here. Okay. So let me use something so you can see it clearly. So this will be your set side liquidity. The same principle applies. So just took our set side liquidity and tap into this again, guys. What is here? Let me move all this shiny stuff here. There is no need for this because we already used it. Now we are the 2 minutes time frame. Now what do you see here? You have what? So if you're paying attention, you will know that this is a balanced price range. So price took out this liquidity and tap into a balanced price range here. Okay, now this is balanced. You tap into it and traded away from it. They call this BPR, balanced price range. Like I always joke with my members, this is I like to see it as unbalanced price range because it is not balanced. It is when price taps into it and trades away from it. That's when it is balanced. This was just one move up, one move down, and then it is an unbalanced price range. Okay, I came up with that shit. All right, guys. So this is you doing this as it is happening. So this is why annotation is very, very important. It is the key. You want to be annotating so that you know what is happening. All right. So this is how you trade this, and off you go. And the market is doing this right now. Okay, guys. So that is how we trade. Then I just created all this. Now I'm gonna have to. I'm just gonna call it live. Then that was a lot of stuff. Okay, so I just moved that to the 1 hour time frame. Now we'll go back to the 4 hour. So that is how you would have traded these things right there. Now, but if you're looking at it like this, you don't know what to do. You like looking like, okay, gosh, how do I trade? What is this? This is just up, down, what is that candle, what is this candle. But now with this live session, we were able to break it down all the way from the weekly to the daily to the 4 hour to the 1 hour and to the 15 minutes, 5 minutes, 3 minutes, 2 minutes, and 1 minute. We didn't go to the 30 seconds. It wasn't needed. We really don't use that. So this is how we trade every day, and this is how you should be doing it, or do it your way. But this is how Mali Traders does it. Okay. Now, today is Saturday. Tomorrow is Sunday. Tomorrow evening the market opens. What you should have done now, or you should be doing prior, or rather before tomorrow evening, is this: you come here. Be one with your chart. The only way you're gonna get good at this is being one with your chart. Forget indicators, forget everything, forget Twitter, forget what everybody's there shouting or saying. Everybody's talking over each other. So you look. The previous trend was high, it was going up, okay, then we came down, and we're doing this on the weekly time frame. We seem to have broken out of this little consolidation. So we are not in consolidatory environment anymore. How do you know that? If you take this little thingy, again, like I said, if you don't know how to do this, join the Discord, watch my other tutorial videos. This was a consolidatory market. Before this move started, I was anticipating that this is going to be taken out, but it didn't. All right. So market broke out on this week, which was May. Took out this high, the swing high. These are major areas, guys. Remember, this is a weekly, so this is like I consider macro time frames. Okay, and now this is the next significant swing high on the weekly time frame, and then this. Okay, so you're going to take these levels. This is what we do, and this is how we do it. This is why you see a lot of weekly, a lot of colors here. You just look like a rainbow when you do it like that, but that is because you're missing that. If you're just looking at it like that, you're missing the point. Okay, if you zoom in like this, you can see this is a weekly level, but this low is not taken out, so this is a weekly higher macro liquidity right here. This is a monthly level, so if I go to the monthly, I know this is a monthly level. Okay, and then I don't have to take this because this is higher. If I like, I could put another weekly level here, but there will just be too many stuff, right? So I have a weekly volume imbalance here. I need to know that, okay, there's a weekly volume imbalance, and then inside, when you go to the daily, you will see a daily volume imbalance. So they both stack on top of each other, so it gives me that, okay, this is going to be area where price will be draw on liquidity. So I mark all my weekly lows, and then if you go to the daily, you will see these imbalances. You mark it out. Again, this is what I told you. Those levels I was showing you. It is on a monthly time frame, and then this. So I put this all-time high as, okay, if price ever come there, this is a significant level, right? So if you go to the daily, you see the same thing. So this is what you see. This is a daily level. But when you zoom in like this, it becomes very like, okay, a little bit wonky. So right now, back to where we are currently, we are consolidating on the daily time frame. We just got this buy side taken out heavily, and the market sold back into this range. So back into the range, you just took out liquidity. I wonder if there's something else on the side over there. But this week has been sort of like I think Papa Power was doing some stuff here. I don't know. I don't follow. So in a week like this, I trade carefully, or I don't trade at all. All right. So now, prior to a new week of trading, we take our levels. We take the daily, the weekly, and the monthly. And then if there's any imbalances, we do that too. So like this, I know that this is a weekly fair value gap, right? So if I go to the weekly time frame here, I mark it out. I have a weekly fair value gap that needs to be tapped into. All right, I know there is a gap there. So if price is coming and price comes here, I know what I'm looking at. So as price is coming, chopping into this level, I will be reducing. All I have to do is just do this and move it. So I know the yellow part is the untapped area. Okay. So this is how I do my level. This is how I trade. It gives me clarity and peace of mind. All right. Now here comes to the other part, which is the Mali levels. Now when I call it Mali levels, this is like advanced levels where we talk about the consequent encroachment, CE, IVG, and all that stuff. Okay, so you do that, you take it on the daily, on the weekly, and then on the daily. All right, so you go to the daily, you see this is how we do it. We take it and we trade it. So when price taps into it, you know how to react. So you can just see this, for example, right? Speaking of the devil, so this is a clear example of what happened. I'm not sure if this was the one we were analyzing before. Guys, was it this trade we were analyzing before? That was yeah, okay, all right, yeah. So exactly, see, this is what I mean by taking your levels. This is your higher time frame or macro levels. You take it and then you go and wait. You take this level, and then as price is tapping into it, you know what you're going to do, which was what we did before in the starting of this mentorship or tutorial or live session. Okay, now in addition to me doing that, I've recently started something called MTA, Mali Technical Analysis, whereby I go, as I'm updating my levels and doing my Mali levels, I do a TA what I want to see. Okay, so this is what I've been doing. So this upcoming week of trading, this is what I want to see. You do this because it is what you want to see. All right, I'm just going to hop over here a bit and go to gold. I'll be back to this in a bit. I just want to show you something. The same thing here, MTA. This one I gave it on my Discord, I think last week or something like that, before this. So I gave this projection that price is going to come and take out this equal high liquidity. Who is here? Did any of you remember this trade, this analysis that I posted? That I want to wait and see this to be taken out, and then I have IVG here, which is this point, and this is the first trade. Price tapped into it, and then we came back and price tapped into this level. So this is what I mean by doing MTA. MTA is a summary of this and this. So it's just succinct. You just tell yourself what you want to see happen in the week or in the next coming trading days. So you don't have to constantly stay at those or constantly stay at those to just make a summary. Okay, right now price is here. All right. Okay, where the next liquidity and what is price likely going to do? Considering where price is coming from and where price is going to. Okay, so you focus on this one. So this is what I drew, and this is what has happened. It played out 100% exactly as predicted. Exactly as predicted, stupid cow. All right, so then this is just a second one. If this happened and then this happened, so basically both of them happen. It take out this equal high liquidity, and it tap into the IFEG, and then came back and tap into this. Okay, I just wanted to show you a live execution of what I'm talking about here on the ES. So now again, going through this MTA, this is what I'm anticipating. Okay, so if I move this away, you will see what I mean. I have I didn't draw it. I have implied fair value gap here. So if I press this Mali level, you will see it. It's already there from. So I didn't need to. I know it by heart because yeah, it's my stuff, right? So I want price to do something like that. So what is here above here? Okay, we have what we call the macro time frame. This blue line is sticker. If you see, is 3x, and then it's blue. It is blue because it is taken from a weekly level. So anytime you see on my chart I have a thick blue line like this, just have it in your mind, this is a higher time frame, or rather a macro level. I don't use this thick blue line for daily levels, usually weekly. Okay, so if I go on the weekly, these are just little things that you can do to help you in your, by the way, this is a weekly OB. It has been tapped into. I'm just going to put it OB, and so you know what PD is, weekly OB, and then I could go like this and turn it into blue also. All right, so because normally it would have been on a daily, and then we just yeah, but now when I'm here I can say okay, weekly order block, we already tapped into it, but now I'm waiting for it to be pushed further. All right, so if you look closely here, I said relative equal highs plus IFVG and liquidity. So there's a couple of imbalances up here. Sorry, yeah, liquidity. I'm waiting for this to happen, and price comes back into this and maybe consolidates or do something else. So this is just an idea scenario that I'm watching. Okay, and I'm still being fully, let me just take this out and lock it. I'm still being very, very cautious of this. Price might still come down here, tap into this fully. In that case, it will be something like this. Price will just, assuming price trades down, take out this, or just, even if it doesn't take out this daily level, this daily low here, you might just do something like this and then continue up. So this is another scenario of what might happen. All right, so every time I'm in, by my chart, I'm looking at these things and I'm telling myself, okay, this is what I want to see. I don't decide it, so I just have like 2 or 3 scenarios that is likely to play out. So that is how this is done. Where is this one? Okay, so why are we looking for it? Because we are trading the bias, which is up. I'm repeating this because one of my student that is live now is talking about I still struggling with bias. So all of this, you have to rewatch this video. The bias is this: we're bullish, we're in an uptrend, major swing high has been taken out, the next one is up here. So these are your drawn liquidity. Okay, we have this weekly order block that has been tapped into and rejected, initial rejection. Okay, this is your initial rejection, and then you're going to see what's going to happen, and then potentially come up here to all the other PDAs, and then you just look for entry like that. Okay, so that's for that. And now I'm just going to take Dixie because Dixie is the king, and then I'm going to call it a day. Let me see, how far has this session been going on? It's already 1 hour. Okay, I'm going to stop the recording here because I don't want it to be too long, and then I'm just going to stop the recording. All right, thanks guys for watching. How do you say it? Like, share, subscribe. Yeah, I think I got that right. All right, have a nice day guys.